Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Tesla stock has dropped as much as 25.35% in the past 6 months, while the S&P 500 index has increased 14.25% during the same period. You may ask these questions. Is Tesla stock undervalued now? What is Tesla's long-term growth prospect? What are the major risks we should know about? What is Tesla's fair intrinsic value per share? And will Tesla reach 1 trillion in market cap soon? To answer all these questions, I'm going to cover these topics in this video. First, I'm going to talk about what are Tesla's most important products and revenue sources. Then I will talk about Tesla's 2 biggest competitive advantage. I will talk about Tesla's 2 long-term growth prospects. After that, I will talk about Tesla's 3 biggest risks we should know about. Then I will talk about what is Tesla's fair intrinsic value per share. At the end, I will talk about am I going to buy Tesla stock. So if you like this video, make sure to smash the like button, subscribe and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP patron. You'll be able to follow all the stocks I'm buying for the long term, and you'll be able to download all the latest intrinsic value calculators I use to analyze stocks. So you will know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Take a look. Let's start. So what are Tesla's most important products and revenue sources? Tesla's goal is to accelerate the world's transition to sustainable energy by making electric vehicles affordable for the masses. Tesla also makes other energy products such as the solar roof and the Powerwall. I want to focus on Tesla's most important products and revenue drivers here. At the time of making this video, Tesla just released its Q2 2021 vehicle deliveries, but it has not released its Q2 earnings yet. If you look at Tesla's latest Q1 quarterly report here, you can see Tesla earns most of its revenues from selling electric vehicles. Tesla's energy and storage business contributes very little revenue to Tesla right now, and is still losing money every quarter. Here's the important part. If you look at the latest vehicle deliveries in Q2, you can see Model 3 and Model Y have much higher deliveries compared with Model S and Model X. This is expected because the Model 3 and Model Y are much more affordable for the mass consumers compared with the Model S and Model X. Model 3 and Model Y are the 2 most important products and they contribute the most revenues for Tesla. Here is another point. Tesla's upcoming Cybertruck and the anticipated $25,000 vehicle will also become 2 very important products because they are affordable vehicles for the masses, especially the $25,000 electric vehicle that will convert many people to switch from gasoline cars to Tesla electric cars. Tesla will also be releasing the Tesla Roadster and the Tesla semi-truck. If you look at this vehicle deliveries chart here, you can see Tesla's trailing 12 months of vehicle deliveries have been growing very steadily every quarter. Now during the same period, you can see Tesla's operating cash flow, free cash flow, and net income have been increasing gradually. All these increases are mainly driven by Model 3 and Model Y sales. Going forward, I believe Tesla's Model 3, Model Y, Cybertruck, and its upcoming $25,000 vehicle will still be the biggest revenue drivers for Tesla because they are much more affordable for the most consumers compared with Model S, Model X, and the upcoming Tesla Roadster. Tesla will also release its full self-driving FSD subscription service that will become another revenue source for Tesla. Now let's talk about Tesla's biggest competitive advantage. I believe Tesla's first biggest competitive advantage is its first mover advantage. Recently, just 2 weeks before making this video, I finally switched to a Tesla. I sold my BMW Z4 and bought a Tesla Model 3 Performance as my daily driver. Now, based on my personal experience, I learned that Tesla has gained a huge first mover advantage compared with other EV makers that are starting and compared with the traditional car manufacturers that are starting to make electric vehicles. So what exactly is Tesla's first mover advantage? This is from Investopedia. A first mover is a company that gains a competitive advantage by being the first to bring a new product or service to the market. First movers typically establish strong brand recognition and customer loyalty. The advantage of first movers include time to develop, economies of scale, cost-efficient ways of producing or delivering a product. The disadvantage of first movers include the risk of products being copied or improved upon by the competition. When people think about switching to an electric vehicle, most people would think about Tesla first. Because Tesla has the most well-known brand in electric vehicles, Tesla is the first company that has made electric cars very popular and much more affordable for the mass consumers. When it comes to manufacturing, Tesla has achieved much better economies of scale through its factories in the US and China compared with other EV competitors. Tesla has a large base of loyal customers around the world. In my opinion, I believe Tesla's Model 3, Model Y, Model S, and Model X vehicles are several years ahead of most EV competitors, especially in autonomous driving, battery tech, software updates, and vehicle design. For example, Tesla's new Model S Plaid is the fastest production car in the world at the time of making this video. According to the latest Q1 report, Tesla's Model 3 has already surpassed BMW 3 Series in quarterly sales in the global premium vehicle sales market. This is from the latest Q1 2021 report. Reducing the average cost of the vehicles we produce is essential to our mission. In 2017, as we began production of Model 3, our average cost per vehicle across the fleet was $84,000. Due to the launch of new products and new factories, and the reduced mix of Model S and Model X, our average cost declined to sub $38,000 per vehicle in Q1. All these things combined, including Tesla's gigafactories around the world, in my opinion, give a huge first mover advantage to Tesla because most people would consider buying an electric vehicle from Tesla first when they are planning to switch from a gasoline car to an EV. I believe Tesla's second competitive advantage is its vision-only full self-driving FSD service that does not rely on LiDAR or other sensors. Most autonomous driving cars, such as Xpeng's upcoming P5 sedan, NIO's upcoming ET7 sedan, Waymo's robotaxi, and Baidu's robotaxi all rely on LiDAR technology and sensors. This is from Tesla's latest quarterly report. We believe that a vision-only system is ultimately all that is needed for full autonomy. Our AI-based software architect has been increasingly relying on cameras, to the point where radar is becoming unnecessary earlier than expected. At the time of making this video, Tesla's full self-driving FSD beta version 9 is already out. It's still a work-in-progress product because it still requires human intervention and requires a driver to monitor it. If you watch some of the videos about FSD beta version 9 on YouTube, you can see Tesla's FSD beta can achieve level 3 or sometimes close to level 4 autonomous driving. This is very impressive because Tesla's FSD beta is vision-based. It relies on cameras similar to using human eyes instead of relying on sensors. As far as I know, Tesla's autonomous driving tech FSD beta is purely relying on cameras, computer vision, real-world artificial intelligence, and Tesla's neural networks. Tesla has already collected more than 3.3 billion miles of autopilot driving data. This gives Tesla a huge competitive advantage in autonomous driving compared with other EV competitors that have much less autonomous driving data. Elon Musk believes that Tesla's vision-based approach to autonomous driving is much better than other autonomous driving tech that relies on LiDAR and sensors. Now, if Elon Musk is right, then Tesla's full self-driving FSD using computer vision, real-world artificial intelligence, and neural networks should be much more ahead of all other EV competitors that rely on LiDAR and sensors. Now, let's talk about Tesla's long-term growth catalyst. I believe Tesla's first long-term growth catalyst is the increasing adoption of electric vehicles around the world. As of now, many countries around the world are starting to phase out selling internal combustion engine cars. Now, according to this article here, you can see all these countries and states that are starting to ban gasoline cars. Countries such as Norway and South Korea will start banning gasoline cars as soon as 2025. Other countries will start banning starting by 2030, 2040, or 2050. According to the latest Q1 2021 report, internal combustion engine vehicles comprised 97% of cars sold globally in 2020 and 98% of Tesla trade-ins. This means we can expect more consumers will switch from gasoline cars to EVs because EVs are becoming much more affordable with much longer range than before. Many countries around the world such as the US and China are investing billions in infrastructure such as EV chargers and giving EV incentives to consumers to encourage them to buy EVs. I believe all these EV economic trends will benefit Tesla. Now, I also believe Tesla's second long-term growth catalyst is the increasing sales and large demands for Model 3 and Model Y. I showed this to you earlier. If you look at Tesla's trailing 12 months of vehicle deliveries chart here, you can see Tesla's vehicle deliveries have been increasing consistently almost every quarter. Most of these vehicle deliveries are Model 3 and now Model Y. This is because the Model 3 and Model Y are a lot more affordable for most consumers. If we consider the EV incentives, gasoline savings each month, lower maintenance cost, and Model 3 and Y's higher resale values in the used EV market, the standard versions of Model 3 and Model Y are cheaper than many premium gasoline cars that are in the same price range. I mentioned this earlier. Tesla already released its Q2 2021 vehicles deliveries, but it has not released its Q2 earnings yet at the time of making this video. According to Tesla's Q2 2021 vehicle delivery, Tesla delivered 201,250 vehicles in Q2 this year. 1,890 vehicles were Model S and Model X. 199,360 vehicles were Model 3 and Model Y. Historically, Tesla's Q3 and Q4 vehicle deliveries were always higher than Q1 and Q2's vehicle deliveries. If we annualize Tesla's recent Q2's 200,000 vehicle deliveries, Tesla should have approximately 800,000 total deliveries this year. If you look at Tesla's total deliveries in the past 4 quarters from Q3 2020 to Q2 2021, Tesla has achieved 706,000 deliveries. Now, management said this in the recent quarterly earnings. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. Tesla delivered very close to 500 vehicles in 2020. Based on Tesla's management's expectation of 50% average annual delivery growth each year, Tesla should deliver 750,000 or more vehicles in 2021 because there's an enormous demand for EVs in North America, China, and Europe right now. Personally, I believe Tesla should reach 800,000 vehicles this year if we annualize Tesla's recent Q2's 200,000 vehicle deliveries. Now, once Tesla starts selling the Cybertruck and the upcoming $25,000 vehicle, I believe Tesla's total vehicle sales will increase even further because the Cybertruck and the $25,000 vehicle are also very affordable for the mass consumers. You may want to know this. Tesla's market cap is highly correlated with its total deliveries each year. So for example, Tesla has already achieved 706,000 deliveries in the past 4 quarters. Tesla's market cap is at $633 billion at the time of making this video. Here's my first prediction. If Tesla achieves 800,000 vehicle deliveries this year, then I believe Tesla should reach between 700 billion and 800 billion in market cap this year. My second prediction is this. If Tesla achieves 1 million vehicle deliveries each year by, let's say, next year or later, then I believe Tesla should reach between 900 million and 1 trillion in market cap. This is because Tesla's market cap is highly correlated with its total vehicle deliveries each year. Personally, I believe it's just a matter of time before Tesla will reach 1 million in vehicle sales each year, especially if we consider the upcoming Cybertruck and the affordable $25,000 vehicle in addition to the current Model 3 and Model Y. Now let's talk about Tesla's risk. Tesla's first major risk is increasing competition from all the major car manufacturers that are starting to make EVs and all the pure-play EV makers. As of now, Tesla is starting to face a lot of competition from the traditional car manufacturers such as Volkswagen, Porsche, Audi, Mercedes, BMW, Toyota, Ford, and GM. In China, Tesla faces a lot of competition from NIO, XPeng, Li Auto, and BYD. According to this article here, Tesla's global EV market share has dropped from 29% to 11% between March and April this year because more automakers are selling electric vehicles now. Also in April this year, Tesla's EV market share in the US has dropped from 72% to 55%. I talked about this earlier. Tesla has the first mover advantage. I believe Tesla's biggest competitive advantage are its vision-based FSD autonomous driving tech and its gigafactories that cannot be easily copied by other competitors. I believe Tesla's second risk is the current global chip shortage that is affecting all car manufacturers, including Tesla. Tesla's management said this: as we continue to work through the instability of the global supply chain, particularly around semiconductors and port capacities, while the Tesla team in partnership with our suppliers did tremendous work keeping our factories running, we did experience high expedite costs in the quarter, and they were also higher than they were in Q4, with some minor interruptions to production over the course of the quarter. We believe that this landscape is improving, but it does remain difficult and it's an evolving situation. So if the current global chip shortage continues, it may affect Tesla's deliveries throughout 2021. I believe Tesla's third risk is its Bitcoin holding on its balance sheet. Now, Tesla bought 1.5 billion of Bitcoin in Q1 this year and sold 10% of it because Tesla's management wanted to test Bitcoin's liquidity. Tesla has not released the latest Q2 financial yet at the time of making this video, so I wouldn't know how much Bitcoin Tesla is still holding now. Here's the problem: Bitcoin price has dropped as much as 50% from its recent peak until now. This is because China is banning crypto mining and banning all financial institutions from providing services related to cryptocurrencies. This means Tesla will likely report impairment losses on holding Bitcoin in upcoming quarters since Bitcoin price has dropped as much as 50% from its recent peak. Now let's talk about Tesla's fair intrinsic value. I want to share with you how I calculate Tesla's fair intrinsic value using this intrinsic value calculator here. If you want this intrinsic value calculator, you can download it in my Patreon blog. I've provided the link in the video description. First, I define Tesla's intrinsic value as its future cash flow discounted to the present day. Here are the key assumptions. First, we are using a 10% discount rate. This is higher than the 8% cost of equity calculated by Finbox to account for the higher competition risk. Tesla CFO said this in the latest quarterly earnings call. Taking a step back, we have generated 8 billion in operating cash flows and 4 billion in free cash flows over the past 4 quarters. As we look forward, our plans remain unchanged for long-term growth of 50% annually, and we believe we're on track to exceed that this year as we guided to last quarter. We're using Tesla's free cash flow to estimate its fair intrinsic value because Tesla's free cash flow growth is much more stable and consistent now compared to previous years. We are assuming Tesla's free cash flow will grow at a similar rate to its 50% average vehicle delivery growth each year. Now, I believe Tesla's free cash flow will grow at a compound annual growth rate CAGR between 40% and 60% over the next 5 years. To calculate Tesla's terminal value at the end of year 5, we are using both the perpetual growth model and the exit multiple model. Then we take the average of both models to calculate Tesla's terminal value at the end of year 5. After that, we discount Tesla's future cash flows and its terminal value to the present day. Now let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate of 40% each year over the next 5 years. If we project Tesla's free cash flow to the next 5 years and then discount the cash flows to the present day, then Tesla's intrinsic value should be around 423.56 billion. And if we divide this by the shares outstanding, then Tesla's intrinsic value should be around $440 per share. Under the normal case scenario, we're using a compound annual growth rate of 50%. If we project Tesla's free cash flows to the next 5 years and then discount the cash flows to the present day, Tesla's fair intrinsic value should be around 592.15 billion. And if we divide this by the shares outstanding, then Tesla's fair intrinsic value should be around $615 per share. Under the best case scenario, we're using a 60% compound annual growth rate. If we project Tesla's free cash flows to the next 5 years and then discount the cash flows to the present day, Tesla's intrinsic value should be around 811.29 billion. And if we divide this by the shares outstanding, then Tesla's intrinsic value should be around $842 per share. In comparison, Tesla stock is currently trading at 632.86 billion in market cap and $656.95 per share as of July 9th, 2021. Under the normal case scenario of 50% CAGR, I believe Tesla's current fair intrinsic value is around $615 per share or 592 billion as a whole company. This means Tesla is likely slightly overvalued at the time of making this video. Of course, Tesla's fair intrinsic value will grow over time if it delivers more EVs, has higher sales, and has higher free cash flow each quarter. So am I buying Tesla stock? At the time of making this video, I already have Tesla shares. I am planning to buy more Tesla shares if it drops well below its fair intrinsic value, so there will be a good margin of safety. Based on my intrinsic value calculation, I believe Tesla's current fair interest value is around $615 per share, or $592 billion as a whole company. Here are my two predictions. If Tesla achieves 800,000 total vehicle deliveries this year, I believe Tesla will have a good chance of reaching between 700 billion and 800 billion in market cap. If Tesla achieves 1 million total vehicle deliveries each year by next year or later, I believe Tesla will have a good chance of reaching between 900 billion and 1 trillion in market cap. This is because Tesla's market cap growth is highly correlated with its total delivery growth each year. Now, all of these are only my estimates and my analysis based on my research. They are not financial advice. I always say this, make sure you always do your research and do your extra due diligence first. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP patron. You will be able to follow all the stocks I'm buying for the long term, and you will be able to download all the latest intrinsic value calculators I use to analyze stocks, so you will know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Thank you for watching this video. This is Victor from the Intelligent Investor channel. I will see you in my next video.